Welcome back to the Malaysia Money Matters Show. It's July 1st, 2025. Today we're diving into the financial headlines that, well, really matter for you, both here in Malaysia and what's happening globally.
Yeah, lots happening. We've looked through the noise to pull out the key insights.
Exactly. So let's get straight into it. Kicking off with Malaysian company news, Apex Securities, they're seeing an uneven recovery for local stocks.
Uneven. So not everything's bouncing back at the same pace.
Right. Their advice is basically it's selective buying. They're pointing towards technology, property infrastructure, and utilities.
Makes sense. But the really big number is foreign investors dumping RM12.2 billion year to date.
Oof, yeah. That's quite a chunk of change leaving. What's the impact there? How should we read that?
Well, despite those outflows, the strategy they're suggesting is, selective accumulation. It means don't panic sell, but also don't buy blindly. It's about finding those pockets of strength, maybe stocks that were oversold. Be discerning.
Got it. Being discerning. Okay, next up, Enproserve, an oil and gas maintenance company with an upcoming IPO.
Ah, yes, they're expecting a big boost from the Pengerang integrated complex, needing maintenance soon.
Kenanga Investment Bank seems optimistic. They value it at 30 sen, but the IPO price is 24 sen. IPO closes July 8th, listing on the 18th.
It really does highlight a potentially strong earnings outlook for them. They're kind of a unique downstream pure play, especially with Pengerang.
Interesting. A niche play. Now, something a bit more positive on the foreign investor front.
Oh, what's that?
A net inflow. Foreign investors put RM33.2 million into Bursa Malaysia last week.
Okay, finally, reversing that 5-week selling streak we saw.
Exactly. After that huge RM12.2 billion outflow we just mentioned, is this like a real turning point or just a blip?
It's definitely a positive shift, in sentiment. It's not a huge amount, granted, but breaking that streak matters. Suggests maybe some foreign money sees value again. A confidence boost, perhaps, but maybe a cautious one.
Cautious optimism. Okay. What about the banks? We're seeing foreign stakes in AMB Holdings and RHB Bank hit new highs.
Right, but CIMB Securities is still keeping a neutral call on the banking sector overall.
So what does that tell us? Foreigners like some banks, but not the whole sector.
Precisely. It's selective interest again. They're picking specific names they think offer better value or prospects, not just buying banks broadly. Granular analysis is key here.
Right, digging deeper. Okay, let's talk big contracts. Gamuda.
Ah, yes. Big news there.
They bagged a huge RM3.72 billion contract in Taiwan, building wharf and roads for an LNG terminal project.
That's massive. Shares climbed, understandably. It really shores up their order book, which is already strong at RM34.6 billion.
So this boosts their order book significantly and shows real overseas growth, right?
Sure.
Good sign for investor confidence.
Absolutely. It signals their international expansion is really paying off. A major win.
Okay, sticking with international ambitions, Genting, Malaysia, they put in a bid for a massive US $5.5 billion resort in Queens, New York.
Wow, 5.5 billion. That's a serious play. Decision expected by December 1st this year.
Huge potential impact there, right? A major diversification move if they get it.
Definitely. Tapping into that U.S. market could be a game changer for them, moving beyond just Asia. That December date is one to watch.
And speaking of big money moving, KWAP, the Retirement Fund Inc., has picked 12 external fund managers.
Right. For the Dana Pamaku initiative, they're managing RM6 billion.
Where's that money going?
Into private equity, infrastructure, real estate. The aim is to boost Malaysia's private markets, target key sectors, and, well, get sustainable returns for the fund.
Good initiative. Okay, shifting gears a bit. Marine in general. Their Q4 profit dipped slightly, 2.8%.
Yeah, and the full-year profit fell too, even though revenue was up from better charter rates.
So mixed results for them.
Pretty much. Shows some operational challenges for the offshore support vessel player, but domestic demand is still holding up, which is positive.
Okay, and a quick one, My Services is changing its name.
Oh yeah, to what?
Zetrix AI.
Ah.
Effective July 3rd. Stock short name will just be Zetrix.
Zetrix AI. Interesting. That's clearly signaling a strategic shift, isn't it? Towards AI and blockchain, more than just a paint job.
Definitely sounds like it.
Yeah.
Another strategic move, Ni Huqing Group is acquiring High Fresh Group.
High Fresh, the halal poultry business.
That's the one. One of Malaysia's largest, fully integrated.
Diversification into the food and beverage sector. Pretty resilient market, F&B. Smart move, perhaps?
Seems logical. Go. Reservoir Link Energy, they secured a RM100 million work order from Petronas Caragali.
For what kind of services?
Annulus wash and cement assurance. It spans 4 years.
Right, specialized stuff. That adds really good revenue visibility to their order book for the next few years. Steady income.
Now, a tougher update. Sapura Energy, still PN17.
Yeah, they reported a first quarter net loss, RM 477.96 million.
Ouch. What caused that?
Challenges mainly in their Angola project, plus higher operating costs, but importantly, their restructuring plan is apparently still on track.
For August 2025.
That's the target date, yeah. So, highlights the struggles, but also shows there's a plan they're sticking to for the turnaround.
Okay, something to watch. Now, the Securities Commission Malaysia, they're looking for feedback on their digital asset exchange framework.
Ah, crypto and digital assets. That market's been growing, hasn't it?
Massively. Total trading value hit a record RM13.9 billion last year on regulated platforms here.
Wow. So the SEC is adapting the rules, trying to strengthen integrity, I guess, as the market booms. It shows growing acceptance, too.
Good point. Staying domestic, the government's Optimism 4.0, related to the sales tax review.
Right. The Domestic Trade Ministry is trying to prevent unfair price hikes. 3 approaches, they say, and stern action promised.
So government efforts to manage inflation and, protect consumers during these tax changes.
Exactly. Trying to keep things smooth.
Theta Edge also landed a contract, RM87.87 million,
What for?
building fiber optic infrastructure along a Petronas gas pipeline in Terengganu.
More digital infrastructure. That should definitely help their earnings. It's a growth area.
Definitely. Now, Top Glove, still struggling.
Unfortunately, yes. Hovering near its 2023 lows after, well, disappointing Q3 results.
What are the main headwinds?
Higher operating costs, intense competition, especially from Chinese rivals. It points to ongoing challenges for the glove sector. Earnings visibility is still weak.
Tough times for them. But on a brighter note for plantations, United Malacca.
Ah, yes. Shares surged, 6-month high.
Why the jump?
Much better than expected earnings, and they even threw in a surprise special dividend. Core net profit more than doubled in FY 2025, driven by really strong palm oil production. So yeah, a positive sign for that sector, good operational performance.
Nice turnaround story there. Okay, last one for Malaysia. Yinson Holdings.
What are they up to?
They're hitting pause on major investments, going to focus on generating income and cash flow from current projects.
After another weaker quarter, you said.
Yeah. So this signals what? Financial discipline.
I'd say so. Strategic discipline. Prioritizing existing assets in uncertain economic times. Cautious, but probably sensible.
Okay, let's broaden out now. The international picture. The Bank for International Settlements, the BIS, giving a warning.
Yeah, they're saying the global economy is at a crossroads. Heightened uncertainty, trade disruptions, the usual suspects.
And they're calling central banks a vital stabilizing force.
It really just emphasizes how crucial policymakers are right now. Central banks are on the front lines trying to steer through all this global complexity. It's a tough job.
No kidding. China, still seeing trade tensions.
Seems so. They're keeping anti-dumping duties on stainless steel, including from Indonesia, to protect their own industry. And while factory activity decline eased a bit in June, that weak domestic demand is still a major drag on their recovery.
So protectionism continues, and internal economic challenges persist in China.
That's the picture, yeah.
Meanwhile, in the U.S., trade talks with Canada were on, then off, then back on again.
Yes, classic Trump-era negotiations. Abruptly ended talks, threatened tariffs, then things revived. Keeps everyone on their toes.
And it's impacting commodity markets, too, like copper, with tariff expectations.
It just shows how U.S. trade policy, or even just the threat of policy changes, creates ripples and uncertainty everywhere. Volatility is the name of the game.
Right. And top central bankers are meeting in Portugal. Sintra. What are they discussing?
Well, trade tensions are high on the agenda, obviously, but there are also these bigger questions emerging about the dollar-centric system maybe unraveling.
Especially with the dollar falling to near a 4-year low against the euro.
Exactly. It raises pretty significant concerns about global monetary stability and, the dollar's long-term status.
Yeah.
A potential major shift to watch.
Wow. Big picture stuff. And the European Central Bank, the ECB, they've adjusted their strategy.
Yeah. They fine-tuned it to handle more frequent shocks. They confirmed a symmetric approach to their 2% inflation target.
Meaning they'll tolerate inflation slightly above or below 2% for a while?
Essentially, yes. It shows central banks are actively trying to adapt their toolkits for a more volatile world, building resilience.
Makes sense. Okay, let's look at oil. Prices fell.
Yep. Geopolitical risks in the Middle East eased a bit, plus OPEC Plus is actually set to boost production slightly in August, about 411,000 barrels per day.
And demand concerns are still there.
Persisting, yes. So more supply coming online, plus worries about slower global demand that's weighing on prices. It's a constant balancing act.
Directly impacts everyone at the pump eventually.
Yeah.
Okay, finally, world shares overall.
Hovering near recent record highs, actually, boosted by those revived U.S.-Canada trade talks, strong U.S. tech performance, and interestingly, European defense stocks gained too, likely on NATO spending pledges.
So overall positive risk sentiment, it seems, but with caveats.
That sums it up well. Specific good news is driving markets up, but as we've covered, those underlying uncertainties, trade, inflation, central bank moves, they're all still very much in play. It's optimism mixed with caution.
A complex tapestry indeed. And that wraps up our deep dive for today. What really stands out is just how connected everything is, isn't it? From a local IPO to global trade jitters.
Absolutely.
Yeah.
Staying informed, trying to understand these connections, looking beyond the headline, that's really your best tool to navigate these markets. They are dynamic and often surprising.
Couldn't agree more. For more essential insights like these, make sure you subscribe to the Malaysia Money Matters podcast. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.